Well, good afternoon, good morning, good evening, depending on where you are. My name is Scott Kelly. I'm with Black Dog Venture Partners, and I'm your host for today's VC Fast Pitch. What I'm going to do in just a moment, I'm going to share my screen and just go over our agenda for today, and then jump right into it. So again, keep your mics muted. We are going to be recording this session, and then don't put anything to chat until we cue you to do so. It just keeps everything nice and clean for everybody. So let me do this. I am going to share my screen and go over some logistics. All righty. I'm assuming everyone can see. Can everyone see my screen? If you can't, just give me a thumbs up. Fantastic. All right, I'm going to go to slideshow mode. Bear with me. All righty. If I can have Kevin and Hamath as people enter, just admit them into the call. Oops. Well, what happened there? Let's try this one more time. All right. All right. Bear with me. Apparently my presentation fell off, so we'll just take one little break here while I get that situated. Otherwise, I'll just do it verbally. I've done this 65 times in the past, so I think I'm pretty good at it. I think I know the agenda. So bear with me one second. Okay. I'm gonna let this person in the room. All right, sharing screen again. All righty. I'm just gonna go in slideshow mode. So again, welcome to today's VC Fast Pitch. Our agenda for today is obviously I'll be going over some opening remarks at this point. I'll be doing some investor introductions in just a moment. If you're going to be part of our investor panel, and you are part of our investor panel, that includes Laurits and anyone else who's an accredited investor, if you can use the raise hand function, I'm going to be asking you a question in just a couple of minutes. And then after we do our investor introductions, we're basically going to ask them two things. One, tell them about yourself, your firm, and what you invest and how you invest. And then we want to get some feedback on a minute or two of what you want to hear from investors. And then we'll have our 5-minute company presentations, and I'll go over that in just a couple of minutes. And basically, it's going to be a 5-minute timed presentation. I'll be here with my cell phone, and I will give you a 30-second cue, and I'll go over more of that in just a second. After our presentations and the Q&A session for each presentation, we got a really exciting announcement. We're going to be breaking news today. We're excited to have Laurits from Flippa Invest. So you're going to want to stay to the end, because after our companies present, you're going to hear an opportunity for all you companies on this call to get in front of 70,000 accredited investors through their platform. So Laurits has I think a pretty exciting presentation for us today. So we got some great companies presenting. Just to kind of give you a little background, we've got Womb World starting with Jordan Freda, followed by Hook Security with Zach, Blueprint Music with Phil Ryan, HealthPaaS with Kevin and Tom, Dozen Diamonds, and then we'll have RB WEV Classics presented by Ryan Morris, Presend presented by Drew, Actualization.ai presented by John Licato, CupRoyale presented by Ralph Brown, and then we'll have our presentation from our folks at Flippa. After we do all the presentations, including Flippa, we'll have a Q&A session. We'll be able to get feedback from all of our investors, and you'll have, based on time allowed, you'll be able to present any questions you might have to them. There are a couple of rules that I want to follow. Again, make sure your mic is muted at all times until we, because you are recording this. if you have a question after our companies present, use the raise hand function, so I can either call on you or you can post your question in chat. Now this is an opportunity for the investors to ask questions. So investors will get the first shot at asking our entrepreneurs questions. If there's some time allowed, I may open it up to the audience. But if I do open it up to the audience, understand a question is not an opportunity to pitch. We have our 9 companies presenting today. But again, and we'll talk about more opportunities to pitch in the future. Okay. Don't post anything in the chat until we prompt to do so. And with that, now it's time to show me the money. And so I'm going to unshare my screen. What I'm going to do now is, if you are on our investor panelist, if you could just raise your hand. We've got a bunch of people on the call. I'm going to try to pull out who you are. Dan Glunt, you're on my screen first, so I'm going to hit you first. So Dan, why don't you share a little bit about the Hatter Angels and yourself, where you invest, how you invest, and then what you want to hear from presentations today.
Thank you. Hatter Angels is a student-led fund at Stetson University. We are 4 years old. I co-founded it with my buddy Milt Douglas. We invest in real companies that are sourced and interviewed by our students. Typically, our average class is 12. This coming up semester, we have 15. We've invested in 8 companies. We've written 9 checks, so 1 follow-on investment totaling $1.4 million. We've invested in aerospace, accounting software, you name it. We are industry agnostic, although we shy away from invasive medical technologies. We source most of our deals from the Venture Atlanta, and this upcoming March, the Florida Venture Forum. We love to partner with local VC firms like Florida Funders, Deep Work Capital, PS27 Ventures. We've done so. Those tend to be our best and most performing. Today, looking for always enthusiasm and moats. You know, the capital markets are getting very interested. We're starting to see IPO activity. I want to know how I'm going to be protected. And, you know, it doesn't have to be intellectual property patents, but how are you going to, maybe it's time, maybe it's just a lot of barriers to entry, but I want founders to really talk about the moats that they've created and why it would either be very difficult from a litigious standpoint or from a time standpoint. Thanks, Scott.
Yeah, thanks for that, Doug. Josh Clagard, are you there, Josh? You were there for a moment. I'll get back to you in a second. All right, I'm going to scroll down. If you are one of our investor panelists or you're an accredited investor, if you can, just use the raise hand function. I'll call on you. I'm going to call on one of my an old friend from California, Connie Harrell. You there, Connie? I'm going to pick on you. Everyone's shy today. All right, I'll give her another chance. Let me see. I'm scrolling down. Let's see. Eric Minnick, are you there?
Yeah, I'm there.
All right, Eric, thanks for joining us. Why don't you share a bit about your firm and then tell our entrepreneurs today what you want to hear from their presentations.
Yeah, for sure. So I run Versus Ventures. We invest early stage in gaming, sports tech, and fintech, and kind of the intersection thereof. So this is my first fund for Versus Ventures. Part of this, I ran a family fund running a very similar strategy. So far to date, I've written 17 checks out of the fund. I'm pretty active out of it. I'm also still in the process of fundraising as well. So I've been doing some of these pitches. So I know some of the pain you're going through. I'm also a former founder, so I've been on that side as well. Yeah, what am I looking for? I mean, I'm looking for the growth story. What's the strategy to kind of grow the business from kind of the nascent product that you have to something that is venture backable, venture scale. It can raise follow-on rounds and or be a ripe target for acquisition. And so I'm just really interested in that growth story.
Fantastic. Thanks for joining us. Sam, are you there, Sam?
I am.
Awesome. Sam, why don't you share a little bit about your firm and and then share a little bit about what you want to hear from the presentations today.
Absolutely. Great to speak to you all. My name is Sam Bauminyar. I am not here as an investor today, but I am here as an investment banker. I used to work with a number of large firms. I focused on merger acquisition work and capital raising work for a host of clients, founder-run clients, family-run businesses, sponsor-backed companies, and large strategic companies. I've gone out on my own and I've started my own boutique advisory practice now. And if there's interest, happy to connect with you afterwards to talk more about that. But I would be continuing what I was doing previously, which is to advise clients on topics like M&A, capital raising, and valuation. From a sector perspective, I focus heavily on tech and anything tech enabled. And from a client perspective, the ideal client that I would advise and serve would be a client that is a growing business, already profitable or on the path towards becoming profitable in the near term. And for many of the folks who are going to be presenting today, who are going to be more early stage, I'm always happy to keep the relationship and have dialogue with you to give you a sense of what down the line investors and buyers for your business might be looking for so you can position accordingly. So what I always look for is in this early stage, some of the strategic, some of the market related dynamics that I think this business that you're going to pitch is engaged in, because then that will help me understand what the story is for liquidity for the business for years to come.
Fantastic. Thanks for joining us, Sam. I appreciate that. So scrolling by, Josh Cleghorn, are you there yet? I know Connie's at the airport, so she's probably going to have to go.
Yes, I am, Scott. Sorry.
No worries. Josh, thanks for joining us. Share a little bit about your firm, where you invest, and you've been on a couple of these. Tell everybody what you want to hear in their pitches today.
Yeah, hi everyone. Pleasure to be here. I represent DGen Capital. Primarily, we focus in the crypto space and the defense space. That's kind of our bread and butter, but we're always looking for something new and exciting. So excited to be here and see what everyone has to offer.
Great. Anything you want to, you've heard some pitches from some of our previous events. What are some things that you want to hear in particular from the entrepreneurs, Josh?
We like DGen Capital stands for degenerate. So we like the off the wall, the outside the box, and some of the just not normal things.
Awesome. Fantastic. You kind of came on late. I don't mean to put you on the spot. If your connection works, we'd love to learn a little bit about your firm and then what you want to hear in pitches today. Are you there? Let me see if he's. Okay, we're going to have to. Okay. All right. Is there any other investors I missed? I know we've got some that are going to be coming in later today, but I want to make sure we give everyone an opportunity just to introduce themselves and their firm. All righty. Well, let's do this. I know there's some people on the call that are not being a little shy right now, but obviously they'll probably jump in as we go. So why don't we do this? I'm going to throw some things in chat. What I'm going to do first is I will throw our list of the order of presenting companies. Let me do that. Bear with me 1 second. And while I'm doing that, Laurits, you didn't get a chance to talk yet. I know it's a little early in the morning. Don't share too much about Flippa Invest right now, because you'll have an opportunity. But tell everyone on the call what you want to hear from the outdoor pitches today. Are you there, Laurits?
Yeah, sure. Hi. Yeah, my name is Laurits, and I'm with Flippa Invest. And what we're kind of looking for, or what our investors is looking for, is revenue growing startups in the digital space. So online businesses mainly registered in the US. Those are like the 3 investment criteria. So I'm always interested to hear traction and any financial metrics that startups are proud of. Could be also traffic wise, profit wise, but especially revenue wise.
Fantastic. Thank you. All righty. I'll probably call on some folks as we go. I know I got a few friends there. Bob Stam, an old friend, a few others are there. They may get some questions from those folks. So Let's do this. We're going to get started right now. So basically what's going to happen is I'm going to call on our first entrepreneur. I'm going to have my stopwatch set at 5 minutes. Bear with me. Let me get that part right. Okay. And then basically what's going to happen, I'm going to call. Oh no. So basically what's going to happen is I'm going to call on you. You're going to share your screen. I'm going to count you down 3, 2, 1. You're going to pitch for 5 minutes. What I will do is at 30 seconds, I'll put a 30-second warning in the chat. And then at the end of that time, I will end your presentation, and then we'll open up for Q&A. So our first presenter today is Jordan from Moonworld. Jordan, are you there?
I'm here. What's up, everyone? Good morning. Hey, Scott.
How you doing? If you
Good.
can share your screen, that'll be great.
Well, one sec. Cool.
All righty. All right. I'm going to count you down. 3, 2, 1. I'll give you a 30-second warning in chat. 3,
Sure.
2, 1, go.
Hey, everybody. My name is Jordan, and I am the founder of a massive multiplayer mobile game company and entertainment company called Moonworld. But before we dive in and talk about what that is, I want to give you a little bit of background on myself. I'm an entrepreneur with multiple exits. At the age of 19, I became an Emmy honor-winning visual effects artist and founded my first company, which was a visual effects and CGI production company in San Francisco that worked on some of the biggest movies in Hollywood, like Captain America, Harry Potter, etc., for about a 6-year stretch and period in time. I then went on to found a marketing agency that specialized in building and scaling brands. So everything from the strategy to the actual production of the material to figuring out supply chain logistics, everything, and the advertising, with the objective of scaling businesses from essentially like 1 to 3 million to 10 past 30 million. And that's what I did for the last 8 years before founding Moonworld. The reason I say that is, I have a highly creative and highly technical background, and I have brought together my skills of what Moonworld is, as well as team members whom I've worked with for a long time. So what is a massive multiplayer mobile game? We'll get into it. But in essence, what we're doing is we're currently seeking $2.5 million for 10% equity to support 18 to 24 months of us behaving at scale, acquiring customers, continuing to improve the product, and to essentially just scale it with the main objective of inspiring the creativity of millions of people around the world through gaming. So massive multiplayer mobile game. That is a place where people from all around the world can in real time explore, play mini games together, build their avatars, and create shipping container homes, which are chat servers, which is a sort of like a primary component to what we're doing here. So it's a bit of a social network meets a casual gaming space that's fun, easy to play, and pretty much anyone can play. So when you think of something, I guess you could think of like Roblox as something we might be competing with, or The Sims. So you can play with friends, voice and text chat, go on adventures together, and do these basic mini quests that are fun to engage in and kill time in. Create a fully customizable character from your fashion to your skin tone to everything about it, and then create this home that is yours. And then you can explore the map with friends. This is actually live, so I'll get into a little bit more about that in a sec. Having trouble getting to the next slide here. So the gaming market, the reason I entered the gaming market is I wanted to use my skill set as a creator and as a technologist to inspire people. In my past life and in my past business, I was focused on making other people lots of money. I said, hey, why can't I do this for myself? And why can't I, bring happiness to people and create a product that's memorable, a memorable intellectual property? And the gaming sector is, quite frankly, exploding and growing all the time. The top 50 MMORPGs, which is kind of where we're classifying ourselves in casual mobile gaming, they generate 1.2 billion in annual revenue. And in essence, that's the top 50, and 60% of those were independent companies or independent studios first before they became big and got acquired. So there's definitely space to take market share. There's space to create and craft something new. So we did soft launch our game. It's available now on iOS and Android. It's free to download. We did $262,000 in early adopter membership sales in under 6 hours when we announced it. We debuted at Tokyo Game Show where we had 2,800 organic user signups and a 30% day one user retention, and overall an even better user retention ongoing now that that was about 60 plus days ago. So we have an even larger user base at this point. We've also tested customer acquisition over the last 3 months and have very impressive customer acquisition and CPI stats for attracting customers and players. We advanced to the second round of selection for A16Z's speedrun gaming competition, where we eliminated thousands of other people. But we're still waiting for the final verdict. And we're in talks with Sega and Razer for potential distribution deals. And I met both of them in person and went to their corporate offices in Tokyo while I was there. The game itself is based on a story, because in gaming, story matters. It's important. And this story was licensed. It's a webcomic that is distributed to 1 million monthly active readers, and 200,000 people read our webcomic associated with the game. And we can also use that as a funnel to leverage players in for customer acquisition. We've built a hell of a community, and people around the world are mooming. They are buying our products, physical and digital, and using it and embracing themselves and their creativity through us. So we've created a brand. We know that product market fit is there. And we know that we've created a scalable vision that can make money. The way to make money is in-game transactions, purchasing of avatars, skins, virtual items that enhance gameplay, premium subscriptions, and collectible drops. And we have other ideas of how to further expand that in the future. Use of funds over the next 18 months is outlined here. And our 5 to 7 year exit strategy is to exit to a larger company like Tencent, Savvy Games Group, Take-Two, EA, or Sega. Obviously, already being in touch with some of these groups as well, just early on, keeping them appraised of what we're doing. And this is a bit about the team. I think I'm coming up on 5 minutes here. Can't really tell, but happy to take further questions and let you guys know anything that you want to know. But live.
All right, you just came up on 5 minutes, so why don't we do this? If our investor panelists, we'll start with investors. If you have questions, you can raise your hand in chat. And I can call on you and you can ask your question. I had a question regarding marketing, Jordan. I have Roku for my streaming, okay? And I'm not sure how they're feeding the ads, but I get a ridiculous amount of mobile video game ads.
Yeah.
Okay. Maybe share about how you're acquiring customers versus how they're attempting to do it.
Yeah, absolutely. So it's actually funny. I was at a meeting yesterday with a large movie studio owner whom I know here, and he was talking about Roku specifically and how Roku is a high target for placing mobile game ads. So our way of acquiring customers is also digital marketing. It's digital marketing through, like high polished creative and fun creative, as well as game streamers and influencers. In the gaming industry right now, the average CPI is looking like $8 per user. We've done some pretty extensive tests over the past 60 to 90 days, and we're able to get our users in for 78 cents to $1.32. So we have a pretty big advantage there, but we're using networks like TikTok, we're using Meta, we're using, other digital ad platforms like Google, YouTube. And then we can even go into things like over-the-top television or, things like Roku and Amazon as well. But I think that's once we get a base level of scale from these other platforms, because those are always going to be the larger reach, more actionable thing, because a user can click install right away when they see the ad. And so, for us, it really is a marketing and advertising game. And one of the other things we've done, Scott, that others, I'm not going to say others have not, but I've seen their implementations of it and it's not very good. We spent a lot of time engineering an original platform that's a partner platform where both influencers can get rewards for playing our game and spreading our message that we just started rolling out this week. And we're going to offer that to regular players and users too as an incentive to refer friends. And that's a place I've seen a lot of people fall short, especially on mobile games, which is funny because it's a perfect platform for that type of behavior.
Okay, awesome. One other quick question I had is that maybe share a little bit more about your revenue model. How do you make money with this mobile game?
Yeah, so our revenue model is, it's free to play, it's free to enter. But once you're on the map, you're going to see other people playing that have different customizations that they've done. For example, the way they look visually, right? The fashion they're wearing, the tattoos they have. We can sell individual tattoos. And games like Roblox and Fortnite, they do several $1 billion a year in digital revenue transactions. So we have that where there's lots of like gameplay enhancing stuff as well. For example, in our game, boba, pizza, and tacos give you special powers. and you can either collect those by playing, or you can buy packages of boba pizza and tacos with real currency. It's all streamlined through Apple Pay, Google Pay, and PayPal on our website. And then we have a premium subscription model, which takes your shipping container home and gives it powers that other users don't have. So let's say you're on the map and you want to come to my home, and you walk to my home and you go up to your like little shipping container penthouse. My house might have things that yours doesn't, like enabled voice chat or a special social media wall where you can post things and messages that other people can't. And that premium subscription is a recurring subscription that we're going to roll out. And you also receive our virtual currency as a result of subscribing. So there are perks where you're getting new fashion items and new things that other people are not getting as a subscriber. So it incentivizes. And like, it's honestly a bit of flex culture, right? Like my generation, we used to want the cool clothes, the cool item, the cool collectible, the cool watch, right? But the modern generation, the newer generation, for them, it's all about what do you look like when you're perceived online when other people are looking at you. So a lot of the money is going that way. Like, ask any teenager what they want for Christmas, and they're going to tell you some sort of in-game currency or something like that.
Awesome. Thanks for that presentation, Jerry. If you can, would you throw your contact information in chat?
Sure.
And then next up, we've got Zach for Hook Security. Zach, you there?
Yes, sir.
All righty. You can share your screen. I will, once you are ready to go, I'll count you down and we'll start our timer.
Sounds great. All right.
All righty. 3, 2, 1, go.
Awesome. Well, thank you, Scott, and thank you, everyone, for joining us this afternoon. My name is Zach Eikenberry, co-founder, CEO of Hook Security. And before we jump into Hook, I'll give a little background on myself. I am one of those serial entrepreneurs, hired myself out of college, wrote one resume in my life and didn't even take the job. So Hook would be my 8th company. I've had a few exits previous, and immediately before Hook, started 2 high schools and a middle school, helping young people become entrepreneurial. Or like we like to say, you'll never be unemployed if you can hire yourself. And so I am now in the cybersecurity space, and it's an interesting jump. Retired from the school in 2019, was talking with my now co-founder, Adam Anderson, who had just sold his cybersecurity company. And he was telling me about this niche within cybersecurity known as security awareness training. And that's simply put, it's training non-technical people to recognize online threats and manipulation. Up to this point, that's primarily been phishing emails or fake emails that come into your inbox, although those threats are now rapidly expanding to a number of other modes and mediums. And I remember him talking to me about awareness training and going on and on for several hours. And finally, I interrupted him and I said, it sounds like we took all the bad ideas from public education and put those into corporate training. He said, yep, that's exactly what we did. So Hook Security is the byproduct of spending several years of research looking into the training and awareness space when it comes to cybersecurity and online threats. It's built on several hypotheses and theses, and has a pretty unique point of view when it comes to it. But we'll see what we can dive into today in this 5 minutes. So as a headline, we're headquartered in Lakeland, Florida. We're a mighty team of 9 people and founded in 2019 here. Give you some other snapshots before we jump into exactly what we solve and how we do that. We're coming up on the year. We're going to be about 50% year-over-year growth, 650 customers, a lot of really fun logos. Currently at 1.9 million ARR. And what might be interesting to some of you is we've now crossed over into that cash flow positive state. So pretty proud of that. That took a lot of work to get us there. So let's talk about the problem with awareness training. Most of you on this call have probably experienced some sort of compliance training, awareness training, whether that's you've received a fake email in your inbox and you were told not to click, and if you clicked, you were penalized for it, or you have gone through some sort of animation or anime with raccoons and masks. There's just a number of issues that come up when it comes to modern security awareness training, and you can put it into 2 buckets. We have an efficiency problem and an effectiveness problem. We're not doing it well, and we're not doing the right things. And so once you kind of have that systematic or systemic level of issues within an entire training industry, It's not really hard to be that innovative. So bringing a pedagogical, psychological, neurological view, which we call psychological security, to this space has had a pretty profound impact. So one of the things I think is really helpful is to just say, let's boil this all down. Zach, how is Hook Security different? What do you offer differently? The biggest innovation we offer to the world right now is we train employees in the flow of work. So we train employees inside their inbox. We train employees inside of Slack, inside of Microsoft Teams, Zendesk, inside your text messages. We get inside where employees are and we train them there. We do have an LMS feature. We can deliver learning experiences through SCORM files, if you're familiar with that, to the enterprise. But what most people are looking for today is they're not looking for another tool. They're looking for something that helps train their employees exactly where they work, and that's what we do. We offer this in a few different ways. I'm going to showcase the Slack angle because that's one of the easiest ways. We do the training there. We do phishing simulations like what they have on the market. We do a few things different. Even within Slack, we're able to do recurring quizzes and surveys and announcements that get in front of your employees where they are. We're able to do streams where we can showcase the latest update. And we do have event-based training, which allows us to, any event that happens in your enterprise, we can do training there. We do offer humor-based live human actor training, and we are addressing the fastest growing niche within cybersecurity. I have a number of great logos, and we're one of the things that's interesting about us is over 90% of all our clients upgrade to us from a previous provider. So we're seen as an upgrade feature. We're currently raising $300K available. We're looking for that last check in $1 million round. And we are looking at a priced equity preference at this point. So I'm going to give us back some time here and whatever I can.
Awesome. Thanks, Zach. Questions from our investor panelists. If you can raise your hand in chat, I can call on you. So, Zach, I'm going to kind of ask a leading question because obviously we have something we're going to be working on down the line. Where does deep fake and other type of security breaches? What's the next big threat in cybersecurity?
Yeah, I think what's interesting is what security information officers say is the fastest growing threat to their companies, and that is what you just mentioned, deepfakes, impersonating with video and audio, anybody else out there on the internet, usually internally. Right now, that's at the scam level, which is a part of the cybercrime space, and we're starting to see that move over into misinformation, disinformation, and a number of other manipulation tactics. So most of the industry is scared right now. There are very few options to deal with deepfakes. Hook, we're trying to address that. We're starting one of the first conferences in the Southeast just to bring minds together to talk about this issue. And we're the only solution in the space right now that offers deepfake trading. So we are leaning into this. We are saying, what can we do today to help your employees recognize and respond to deepfakes as well as fake emails? We're quickly anticipating, how do you use artificial intelligence, or just intelligent tools rather, to push back against these AI manipulation?
Fantastic. Thanks for that. Harak, you had a question? You can unmute yourself and ask that question. Go ahead.
Thanks, Scott. Zach, I hope you can hear me well. I'm in a really patchy place. But two quick questions. One, what's your direct competition? Number one. Number two, when I hear cybersecurity, it's quite a vast place. Which all area you cover, actually?
I'm not sure I understand the second part of the question here. So I put a little grid up here on just features and simplicity and various types of what we might call the third wave offering in the space. Security awareness training has been around for going on, since the beginning of the internet, 25 years plus. And so where we fit in the equation are for those companies that are regulated. They're looking for some sort of compliance. They've tried all the other tools out there. They're no longer interested in just checking the box. They want to improve their culture. So they're looking for a different human actor training experience. They're looking for something that is not an additional tool and is not redundant and not harder on them to manage. And they're looking for, frankly, something that they can be proud of. We're right now, I can share with you, we're the only company I'm aware of that our clients, when they leave Glassdoor reviews on their company's culture, has referenced positively Hook Security. We've been mentioned in other people saying this company is great. They use tools like Hook Security and we love it. And we're very proud of that because that simply means that the security team can get invited to happy hour again. And that's one of the benefits. I'm not sure I understand the second part of your question, Parag.
No, I guess when I see this grid, I kind of got my answer. So you, without understanding, gave me answer. So that's really good. So I was looking into which space exactly. So for example, there is Splunk, there is others. So exactly where you fit in, and I'm trying to put a picture around against
Yeah.
whom I will pitch you against, that way.
Yeah. So the a little over 50% of all of our customers come to us from the large incumbent in the space known as KnowBe4. And so that's probably the easiest one-to-one comparison. We're on the training side of the cybersecurity stack, so we're the ones interacting with the humans. We're probably one of the few brands on the cybersecurity tool set that the employees actually know and recognize. They have no idea what the firewall name is or their email filter, etc., but they do know their training company.
Clear enough. Thank you, Zach.
Zach, while you're on the phone, while you're on the line, maybe you could share a bit about your company. You get a chance to share that before.
Oh, sure, sure. Sorry, Scott, last time I couldn't answer that. So just a quick intro. My name is Hirak. I am based out of Stockholm, Sweden. I'm an angel investor. Plus, I have a company called Pine Impact Investment out of Stockholm. So we do a little bit of investment in various stages, sector agnostic, but me personally, along with other partners, are a bit tech-sided. Anything to do with some kind of tech or tech platform, kind of our interest area. And the sector can be, as I said, agnostic. We have done some investments, mainly in Europe and bit of emerging markets. That's where it is. I feel US never had any dearth of VC money, so we are trying to bridge the gap in Europe. We all know Europe needs more, so that's where it is. But yes, anywhere we get a good story, we would definitely jump in. Thanks for the opportunity.
Thanks, Eric. I appreciate that. Thank you, Zach, for your presentation. You throw your information in chat, and if you can, just unshare your screen, and we'll have Phil Ryan from Blueprint Music.
Hi, guys.
All right, Phil, I want you to share your screen, and what I'll do is I will set my timer at 5 minutes. And as you've probably seen already, I'll give you a 30-second cue in chat. So, all righty, when as soon as it's up, 3, 2, you ready? 3, 2,
Yeah, ready, go ahead.
1, go. You're good.
My name's Phil Ryan. I'm one of the co-founders of Blueprint Music. So I just want to start with, imagine a world where artists and fans have control of the music industry, where super fans get to connect with the artists, and the artists have a greater retainment over their earnings. Now, the reason we have started Blueprint is because a lot of the record labels currently are now disbanding, and they can't figure out what to do with the super fans. Now, we've got a co-founder who's actually Simon Webb from international boy band Blue. They were big in the 90s and the 2000s. Now, what he shared with us that Blue, over a 3-year period, actually generated 80 million in revenue. But believe it or not, Blue themselves, the singers, only received 1 million. And from that, they had to signal gone. What's going on there?
Lose your screen. Go ahead. Find it again. Hey there, Phil? We may have lost Phil. Yeah, we did lose him. Thanks, Brian. All right, we'll get back to Phil in a moment. While we do this, Kevin and Tom from HealthPaaS, are you there? Kevin, Tom, are you there?
We're here, Scott.
All righty. Who's going to run the slides, Kevin? You or Tom?
Yeah. Kevin, well.
Yep, I
Okay.
will. Sorry, it's coming off mute.
No worries. No worries. No worries.
Let me get you on presentation mode here.
All right. Let me know. Let me know your slides are ready, and I'll count you down and start the clock.
Are you seeing the? Are you seeing it right now?
I can see your screen. Yep.
Okay. Let me
All
open it up.
right. All
Great.
right. All righty. You'll get 30 seconds in chat. I'll count you down now. 3, 2, 1, go.
Perfect. Thank you all. So we are HealthPaaS, your turnkey customizable health plan as a service. So our background, we design, build, and administer branded health plans to create a direct relationship between our communities and their healthcare. So today we're talking about an investment opportunity to staff and support HealthPaaS Colorado. We're looking for 1.5 million, and we're doing under a $6 million safe note with 350,000 already committed. So why now? With the U.S. largest industry with 1/5 of the U.S. economy being unspeakably broken, over $700 billion in waste driven by this outdated technology and human overhead, and the self-insured market contributing to about 600 billion in opportunity from legacy outdated service providers that are being ignored. The opportunity is now. The problems we all agree on, the problems we are solving. Health insurance is confusing. It's fragmented, it's expensive, it's unsustainable for all the stakeholders. Members are paying on average $24,000 a year for a family of 4 to get health coverage. Employers are seeing record double-digit increases year over year, and providers are stuck fighting for market share in certain regions, while the Blues, United, Cignas, and Aetnas of the world have their stock pricing soaring through the roof. Now, there's a monumental shift occurring, and specifically in the small and medium-sized market. This rapid growth of employers with 50 to 1,000 employees choosing to self-fund is taking off, and is contributing to a massive opportunity around the $40 billion reinsurance market that's expected to reach $100 billion in just 5 short years. This change shows significant savings, anywhere from 10 to 20% just by moving from a fixed to a variable cost by controlling all the components. A HealthPaaS health plan adds an additional 5 to 15 on top of this. So companies want to self-insure because it's cost-effective, it's scalable, it's flexible. But the process is extremely complex. It requires outdated TPAs and technology and an experienced HR team that has to jump through a lot of hurdles to fix. The current attempts to solve for this are extremely siloed. TPAs and carriers lack the flexibility and transparency. Hospitals and brokers lack the execution capabilities to actually put a community health plan in place. And there's challenger plans popping up, but they're all stuck fighting a very expensive battle to compete with the legacy carriers. The solution, we've created HealthPaaS. By integrating provider direct contracts, transparent PBM solutions, a clinically integrated network-led medical management team, all pulled together through a concierge member engagement. Our health plan as a service model empowers brands, providers, and employers to provide better care, better costs, with a better experience. So our business model, through 4 business units, we deliver value by creating and executing on these branded health plans. We get paid by platform customers, brands, and plan sponsors to architect, build, and manage these health plans. We get paid by vendors to access our plan sponsors and members. We get paid to operate the various components of an insurance plan. And then in the future, we see opportunity to significantly expand each business unit to go out beyond the health plan market and do singular product sales to much larger ecosystem clients. So what's the pipeline? With HealthPaaS Colorado, we're launching this HealthPaaS Mountain States region. We've already secured the hospital anchor clients. We've significantly de-risked the investment through a number of different milestones. This region alone is expected to be a $50 to $100 million company within 3 to 5 years. We've hired an industry-leading market president to run the plan. We expect to be cash flow positive within 13 to 15 months and achieving 10% market share by year 5. The model here, which we've proven out time and time again, we anticipate launching right into Missouri and Kansas within 6 months, and likely Florida within a year. We've produced a lean operating model by embedding broker distribution and hospital-led marketing initiatives for these branded plans, which is unheard of. Typically, the hospital is just a network. We're actually partnering with the hospital, and they're walking us into their most key customers. So why us? Tom and I have spent 20 years in the business plus building these products and companies. Each component of the health plan we've either owned, operated, or managed in our work experience. And most recently, we've launched and built 3 separate health plans for others, and now it's time for us to do it for ourselves. We've got traction in Colorado, which is why we're launching there, and significant opportunity for growth. Again, 1.5 million. Really just used to staff for the existing contracts. We've already built the plan, we've built the product, we've built the vendor stack, and now need to focus on distribution.
Great, great job. Thank you for that, Tom and Kevin. If you have a question, you can raise your hand in chat, or you can put your question in chat, and I can answer that for you. Today, Kevin, there was all kinds of news, in the healthcare space. Obviously this week, one was regarding how AI and insurance companies are either using or misusing, AI, to underwrite claims. Maybe you could speak about that a little bit, and is AI going to play a role in your business at all?
Yeah, absolutely. So, we already use AI. We actually were a founding, the kind of original kind of backroom partner to lead one of the AI-based underwriting tools to actually build and grow. And actually, if I can, this MGU and branded health plan, we helped backroom the strategy and support and operations to actually build and launch a plan to 8,000 employees, which helped them exit to an insurance carrier for over 170 million just 2 years ago. AI is a huge component of this, and it streamlines the underwriting process, taking away the manual process that's occurring right now. Another huge opportunity is around Tom's background. Tom was an Army medic, nurse by training, built protocols for and managed over 100,000 lives in the Southeast. We use AI in our risk profiling, not just for the underwriting, but for our proactive patient monitoring and patient management. So when we figure out who to reach out to based on the likelihood of an upcoming event. And so AI is definitely playing a big role in where we're headed.
Great. If you have a question, ask your hand in chat, and I can call on you. Yeah, another piece of news that came out today was the bill that's being put out right now to separate, pharma from healthcare companies and insurance companies. Can you speak to that and how you're positioned from that standpoint?
Sure. Yeah. So one of the I guess pervasive issues in the industry is this roll up of the PBM and the health plan. And we've taken a hard line stance on transparency, and all of our programs are based on a strict fee-based model. Many cases, the PBMs are keeping rebates. They may earn more in a rebate than the cost of the drug. And so we've got a drive to lowest net cost model and philosophy within each one of the programs and each one of the components of the health plan. So by managing and operating each piece and each level, we're able to both streamline the cost, but also show a transparent transaction cost around each component. And that's, like you said, you're going to see that uncoupling, I think, of the PBM and the health plan because of that.
Great. Thanks, Kevin. Thanks, Tom. Kevin, if you can throw your contact information in chat, that would be great. And then next up, you can unshare your screen too. Next up, we got Nicole Clark from Dozen Diamonds. You there, Nicole?
Yes, hi Scott, I'm here.
Awesome. All righty. Well, you've done this once before, so I'll count you down 3, 2, 1, and I'll put a 30-second primer in chat. 3, 2, 1, go.
Hi, great to see everybody here today. My name is Nicole Clark. I'm head of growth at Dozen Diamonds, and this is actually my 5th startup. I've scaled 4 startups previous to this, all of them in direct-to-consumer, sort of tech-based companies. And I've taken them from early stage concepts with sort of limited traction to cash flow positive, highly profitable concepts, typically using recurring revenue models. So that's kind of where I live. I'm here today to introduce you to Dozen Diamonds. This is a company turning stress into opportunity and market volatility into steady cash flow. We're raising $3 million for a 15% equity stake, and that's on a 20% discount right now. And what we're doing is redefining retail trading with our stress-free investment method. Now, most retail traders struggle to generate returns. I mean, raise your hand if you've ever been personally victimized by the stock market. You know, retail traders really treat the market like a gamble, often losing capital. The lack of reliable strategy here leads to emotional trading. So a stock is rising, they don't want to miss out, they feel a sense of urgency to buy. And when the stock dips, which it always does, they panic sell and start immediately losing money. And this is what takes us to the #1 pain point for retail traders: stress. Now, we've solved for this by combining behavioral psychology and data science to create an algorithm that turns market volatility into extra cash. Our app makes this powerful tool accessible, and we're putting it right in the hands of the people who need it most, and that's retail traders. The stressless trading method ensures that you always have cash for great buying opportunities. It reduces the stress associated with constantly monitoring these markets, and it generates 1 to 5% extra cash monthly, turning market fluctuations into gains. This is what it looks like. Our algorithm-driven approach buys and sells stocks based on user-defined price points. So very simply, our automated algorithm buys when the stock drops and then sells when it rises. This is how our customer stays in control without constant monitoring or that emotion-driven decision-making. This all happens while the platform is optimizing their trading outcomes. Now, we're looking at a $120 billion global retail trading market, but we're starting with a realistic goal of capturing $600 million share in the US to start. That's 500,000 customers. But as you can see here, the potential for growth is significant. Our fundraise, we're looking at that 3 million. We're going to split that strategically. The bulk of that is going to marketing. What we're really focusing on is education as a core piece of our marketing to help our customers understand our value and actually how they can interact with the market. 30% of that is going to software development to make sure that our app is scalable and that it's really secure for our customers. The rest is spread across legal and compliance, which is very important for us entering new markets, operations, and customer acquisition. Now, with customer acquisition, we're going to be expanding our user base through financial advisors, influencer marketing, and precision targeted campaigns. This is going to be across the US and India. We're launching in India to start and then moving into the US. Our leadership team includes experts from Google, McKinsey, JP Morgan, and together we've got a combined 7 decades of proven success, scaling startups and driving real fintech innovation. Through our advancements in data science, we've already achieved a $25 million valuation. We have 2 patents pending and 6 years of positive beta user data. This is what's validating our approach. Our user base has grown to 10,000 initiated customers, showing pretty strong early adoption. Our revenue subscription-based revenue model is scalable and sticky, and we're aiming for a $5 billion valuation by 2030. This represents a 200x return on investment opportunity for investors at this early stage, and we expect to reach cash flow positive by next year. Our plan is a liquidity event by 2029. We're targeting acquisition by major fintech or financial institutions. These are acquisitions that we're laying the groundwork for right now. And this is what is making Dozen Diamonds a really attractive acquisition target. So Dozen Diamonds is not just one of many trading platforms on the market. What we're doing is we have a reimagined retail investing by turning stress into opportunity. Our proprietary algorithm and white label solutions don't just promise growth. We're delivering a transformative user experience, and we intend to set that as the new industry standard. So we'd be happy to bring anybody here to a live app demo to explore our product. And really, this is your chance to invest in a company that's poised to change the game here. I'm inviting everyone here to invest in happiness and to invest in Dozen Diamonds.
Awesome. Thank you, Nicole. If you have a question, you can raise your hand in chat, or you're going to even post your question in chat. I'm happy to answer that for you now. Question I had, and this could be for anyone on the team, we've had for the most part, a bull market for a fairly long time. And obviously that creates less stress when the market's going up. Have you done any research, or do you know what's going to be the difference if we get to a bear market? In my career, I know others on this call, I've been through, at least one stock market crash and several stock market corrections. So maybe share a little bit about how the strategy works in a down market.
Sure, I can speak to that. So really, the strategy thrives in volatility. So we've got 6 years of real money testing and then 10 years of back testing and simulations. And the algorithm through all of those different situations have consistently turned price swings into cash flow opportunities. So that means that even in downturns, it's buying strategically at lower prices and then uses cash reserves to set up future gains. So it keeps your investments protected as it's operating.
Okay, awesome. If you have another question, feel free to jump in chat. The other question I had in terms of the revenue model, talk maybe a little bit how you're initially going to generate revenue and then other revenue opportunities down the line.
Sure. So yeah, we're starting really, I think our entry to market is pretty innovative. We're starting exclusively with partnerships. So we're starting with financial advisors in India. They're giving us direct access to 100,000 prospects. Many of them are already being initiated in paper trading. For the US, we're looking at social media campaigns and webinars. Webinars go back to our focus on education as part of our key to our marketing. And this is what's going to drive our US adoption. So acquisition costs are projected to be $50 to $100 per user, but that aligns actually really well with our $100 a month subscription method. And we've got a pretty strong retention model behind that.
Question that we have in chat is, doesn't Diamonds launch in the Apple or Google Store in the USA?
Not yet, but we've got a beta app that we can bring you into to take a look at it.
Okay, awesome. Thank you. Any other questions for Nicole? All righty. Thanks, Nicole, for that. If you want to throw your information in chat, that would be great. And we've already got a beta user on the call. So awesome. All righty. Next up, we've got Ryan Morris. Are you there, Ryan?
Hey, I'm here.
Awesome. So Ryan, why don't you share your screen?
Sure. Well, let's give an intro first, then I'll share the screen. So I'm Ryan Morris, Executive Chairman of RBW, and I've got Pete Swain, the CEO, who's here as well. I can talk at the end for Q&A. I've been a serial entrepreneur. I was exec chairman of a public company called Sevcon. We sold to Borg Warner for $200 million in 2017. We made electric vehicle drivetrain components. And then I built a tech company called Turntide Technologies that we raised about $500 million from venture capital, grew to 100 million revenue. And what we're doing is making beautiful, classic, brand new electric cars and the systems to power them. So I can give the background, but basically this is the product we sell. We've been delivering to customers now for about 2 months. It was 8 years in development. It's a very hard technical challenge to build electric vehicles, as you know. The standard way of doing it is to spend billions of dollars on CapEx to build an automated factory. The other way that you can do it is to hand build, do conversions, which is not what we do. Today is about a $30 billion market for classic vehicles in general. It's about 1% of the automotive market. And about half of that demand now is electric. Once you drive a Tesla, it's really hard to go back. It feels like an old clunker if you're driving a combustion engine after driving a modern electric vehicle. And so we take the beautiful, proven aesthetics from the past, we license them or buy them. We can do that very cheaply because they're not in production anymore. This is the MGB and the GT shell that we own the global trademark for. And then we make it electric. So we've spent about $20 million building an electrification platform called the Spirit platform. And we do that for our own vehicles. So now we're in production. We will sell about a dozen cars this year delivered to customers, 60 plus next year. Targets to get to about 100 million revenue within 4 or 5 years here at very high gross margins. So because we're leveraging standard tier 1 components, which we had to invest massively into the safety profile to be a proper new car worldwide manufacturer for, we can buy from those tier 1 manufacturer supply chain rather than aftermarket parts that other people are doing. But today, out of this probably 15 billion of latent demand, only about 2% of that demand is being satisfied because people are doing it as kind of one-off conversions. We are a proper new product. So if you're a customer, you get to buy something with a warranty and modern convenience, just like any other new car. And for probably about $1 million of modification, we can build an additional model. So our next model we're planning after the 2 we have today is a 67 Mustang. Could probably add about 20 million of gross profit per year for every 1 or 2 million of investment in modifying the platform for that new development. And then we also sell the third-party systems to others who are doing resto mods. So there's a lot of companies like that. Like I mentioned, it's a $30 billion market today, but half of that demand now is for electric. So it is hardware, but we're extremely capital efficient with how we deliver it because we are hand building with very standard process, safety documentation. Over time, we can go after bigger markets. So the commercial markets, which is what I worked on previous company, are much bigger. They're something we'll grow into over time. But the classic market is by far the highest margin in the vehicle electrification space. We sell vehicles for about 150,000 each. That's 35% plus gross margins. We've got about 25 million of pre-orders for these initial models that we're already delivering to today. So already in production, already have revenue. This would be for growth capital. So looking for, ideally about 10 to 15 million dollars additional. Existing investors are putting another 5 million in. That's closing in January. So might be able to tag on some new people to that for smaller checks if you're interested. Otherwise, we're looking to do a bigger round to bring on new models. See, yeah, we've launched, got some great pre-R, got a factory. Factory only costs a couple $1 million to build. We don't need robots and all the, kind of Tesla factory stuff. It's kind of getting the best of both worlds of like small volume manufacturing with billions of dollars of R&D into our component stack with our tier 1s.
Awesome. Well, we've got some questions. You had some extra time. So got a question in chat. How are you getting past the new car crumple standards on older classic cars in the US? How are you getting past that?
Yeah, I'll jump in here, guys. So you can build up to 335 vehicles through NHTSA and SEMA. We are NHTSA approved for the US. We have a factory opening in Virginia to build in the US. You can build up to 335 cars US based on the original safety case without having to have the modern crumple zone. We can build up to 700 for Europe and for the rest of the world.
Awesome. Maybe you had some extra time. Maybe you could share a little bit more about, spend a little more time talking about the revenue model, where you are from a revenue and backlog standpoint, and then maybe just share a little about the funding history again. I wasn't sure that was completely clear. So.
Yeah, funding history. So a company's been around for 8 years. Is a very technically difficult thing to do. So to build a proper, safe new car on a productizable platform for serial production, that takes a long time to go through all the safety, regulatory insurance kind of stuff. So about 18 million has gone into the company cumulatively over those 8 years. So I personally put in over $1 million, me and a bunch of friends and a family office that backed Pete in a previous company. We've been trying to not bring in big VCs. I did that in my last company. This company just doesn't need hundreds of millions of dollars. I mean, it's sort of dozens of millions of dollars to build a very profitable big company. And then in terms of, the product development. So, we're building it in the factory now as of 2 months ago in serial production. We opened that factory about a year ago, and opening the US factory, which would be basically a duplicate of the UK factory. That'll be open in, probably 4 months or so. revenue
What's the
model selling
sales?
cars and then systems. So cars, we sell 150 grand, approximately, base, and that's about 35% gross margin. And then we sell.
If I step in on the revenue, sorry, gents, we've got a showroom in London, a showroom in Bermuda, one opening in Hong Kong. We have dealer programs who've committed to over 200 vehicles. So now we're in production, our cars are starting to flow out, and we had our first cars with clients on a small scale in December 21. And we just continued on a small path with our engineering. So we've got a solid base product. And now with the help of the Ryan and US guys stepping in, we've started to scale the product now so we can get over 60 out next year and then double that the year after.
Do people who want these cars, are they interested in particular models? Where are you seeing? I mean, obviously you got some beautiful old classic cars. Is there any type of vehicle that's more in demand? Or
Yes.
where do you see the trend going forward?
Yeah, so most of our clients, they love the traditional MGs. We've got other shapes coming. The reason we haven't gone into other shapes yet is the demand for the MG has been so high. Originally, there was 525,000 of these vehicles sold. Funny enough, it's the classic look, but the fact our biggest question, especially from the US, is does it have Apple AirPlay? Yes. Modern suspension? Yes. Modern steering, power steering, aircon, all those mod cons is good. So the demand is still there for that vehicle. And from our USP point of view, there's no need to market this vehicle. The vehicles we're going into have been marketing themselves, take the Mustang, since the 60s. Everybody knows what it is. They just want a modern plug and play version that can't go wrong.
Fantastic. Great. If you have any other questions, we can post them in chat. You can raise your hand and we can call on you. We'll give that another minute. All righty. Well, thanks for that presentation. Very interesting. If you can, put your contact information in chat, and we'll definitely have some follow-ups for you.
Thank you.
And then you can unshare your screen, and we'll have Drew from Presend. Drew, you there?
Yep, I'm here. Can you hear me?
I can. All right, Drew, why don't you share your screen?
Let me go ahead and try and share. Let me know when you can see it full screen. Works it.
All righty, you are good. All righty. 3, 2, 1, go.
All right, I am Drew Wolfer, and I am the CEO of Presend, which is a dually patent pending and already developed wallet transaction security software for blockchain. Now, we do have a B2B software as a service licensing business model, and we are doing a $2 million seed round at a $15 million valuation, and we are targeting an over $150 million exit. Now, there is a key fundamental problem inside of blockchain transactions, and that is that some of these blockchains don't actually communicate with each other. They're not like our legacy systems where if you send $5,000 worth of USD over to a British bank account, and they will just automatically convert it to British pounds for you. But unfortunately, in blockchain, they don't actually do that, and you can lose your money. So what's happening is all these different coins are on all these different blockchains, like USDC, which is USD coin, is on a bunch of different blockchains. So users are actually losing their money accidentally, not by getting scammed, not by trading, not by doing any of that. They're losing their money accidentally by sending the wrong coin to the wrong blockchain, which then thus loses these platforms that you're seeing thousands of users every single year, because then their customers don't want to come back. So what Presend does has actually stopped people from being able to do that. And our solution is very easily implemented through an SDK, which is a private SDK that we give to all of our clients, like the Coinbases, the Ledgers, the MetaMasks of the world, where they can plug and play our software that stops their customers and users from ever losing money in these random kind of accidental ways where millions of dollars are lost every single year in this exact way. And we do this through a private API and SDK, and it literally takes them like a day to get this implemented. Now, we have already built the software, and I'm going to show you a little demo of it really quick, about a 20-second demo, doing that exact example, sending $10,000 or $15,000, whatever it may be, worth of USDC from your Coinbase to from your Kraken wallet to your Coinbase wallet. Now, if you are to send this on the wrong blockchain, as we just tried to, because Kraken doesn't actually accept nor does Coinbase the FTM blockchain, then they would have actually lost their money. But since Presend was there to stop them from doing that, they did not lose their money. Now, the market size for this is pretty drastic, and I want to talk about some of the platforms that can use us right now, but also the platforms that could come in the future. There are over 50 different exchanges with over $100 million in volume. There's a bunch of different wallets and other exchanges that have a bunch of users. But what we're going to see in the future are platforms like Amazon, Shopify, PayPal using all of these different types of crypto payments. And the last thing they're going to want to do is let their customers accidentally lose their money. So the way that we actually make money from this is by charging licensing fees to all of those types of potential partners that you are seeing on the screen, plus the ones that we were talking about above and beyond that, that will come into the market at a later time. Now, we are a pre-revenue company, but if we are to look at what our licensing fees could bring in per year based off of some of those previous partners that are already in the market, you could be seeing about $15.5 million in revenue in just the first year. Now, our valuation is $2 million is what we're offering at a $15 million valuation. That is what our round is worth. And we are looking to exit at about $150 million plus in less than 2 time after we have obviously scaled our software. Now, there are a couple of different buyers that could be potentially buying us in the future. You've got the MetaMasks, you've got the Visas, the PayPals. MetaMask actually just bought one of our competitors, which is it's a much less robust solution in Wallet Guard. And we actually do everything that Wallet Guard does, but we actually do more. And what we do is we actually have these 2 pending patents that we are in the process of getting issued in the United States and in the European jurisdictions. And if you want to know more about those, be more than happy to talk about them, because that is how we're actually protecting our business from people coming in and kind of competing with us. Now, this is our team. I obviously am the CEO of the company. My co-founder is Laurits Haliski. He's been in software for about 15 years. And Craig Imsley is our CMO, and he is a 10 million plus ClickFunnels awards winner, one of the only one in the world. So we will be the ones going out and trying to get all of these partners on board to license our product, and then hopefully stop people from ever losing crypto in these accidental ways again. If you want to get a hold of me, here is all of my contact information. I will always, I will drop it in the chat as well.
Great, thank you for that. I got a question in chat. Drew, where did the digital currency money go if lost? So
that's a good question. Yeah, so we call it the black hole. We call it literally the black hole. It kind of just gets like burned up, and it's unrecoverable. Majority of the time, it's unrecoverable. So it just kind of goes into weird void that you can't get it back from, which is unfortunate.
So, interesting question. So, obviously, talk about the current state of the crypto market. Obviously, we've had Bitcoin reach new highs. It appears we have a crypto-friendly government coming into play. Talk to me where you think that's going to help the business.
Yeah, so where I see that happening is what it's going to do for us is it's going to bring a lot of these larger institutions in. And what I don't mean just like large institutions like BlackRock doing the ETF. We know about all of that. I'm talking about like the Amazons and the, eBays of the world that are like, hey, you can connect your wallet and you can pay us directly with USDC or, Ethereum, Bitcoin, whatever it may be. The problem is that people are going to have to send those transactions because it's going to have to be trustless almost, because the blockchain is decentralized. So it's not going to be the same as like swiping your credit card. There will be solutions like that, but the majority of the time it's going to be people actually doing those transactions on the blockchain live. And that is where people can actually lose their money. So I do see all these large institutions that are already they already have all of these massive markets that they're doing. I mean, think about how much revenue Amazon's doing every single year, and they're going to bring crypto into this. And the last thing they're going to want to do is, first off, let their customers lose money because they'll lose their customers. And second off, they want to get paid too. So they want to make sure that crypto shows up. So getting a little type of almost insurance policy from us, it'll be a drop in the bucket to them.
Good. So Eric had a question. You want to know what's your pathway to revenue? Obviously, you had some great logos on your deck. How advanced are you in those discussions with those early adopters?
Yeah, so we're actually in the process of talking to Kraken right now. some of these large exchanges are tough eggs to crack. I'm not going to lie. The patents are going to help out tremendously, and the more that crypto is kind of in this bull run, I think is going to help out more tremendously as well, because we're going to see a lot more money flowing in the market. It was much harder to get these people on a call and ask them to spend money on a software when the market was down, but now when they're seeing more new users coming in, it seems to be a little bit easier. And we are in the process of talking to Kraken, which is one of the largest centralized exchanges in the world, and it's the second largest, I believe, in the United States right now. We are going to reach out to MetaMask and WalletGuard as well, because although WalletGuard was one of our competitors, what we would like to do is say, hey, is there a partnership potential here where we make your solution more robust, and that could actually bring an acquisition from MetaMask much quicker than we could have ever thought? And yeah, that's kind of where we're at with it right now.
Great, great. Let's if there's any more questions, you can throw them in chat. Well, why don't we do this? Again, if you want to, if you can, throw your contact information in chat so they can follow up with you. And thanks for that. We got one more entrepreneur presentation, and then all of you gonna want to stay on because we've got a really exciting presentation and announcement from our friends at Flippa. But next up, we have Ralph from CupRoyale. Ralph, are you there?
Yes, I am here.
Fantastic. If you want to talk about what those certificates are on the back, so you can see them, and then we can
I hold 4 world records in extreme power boating, and
Awesome.
so there's only 3 back there, but I own 4. Anyway.
So I just want to give you a little context for your presentation. So why don't you share your screen, and we'll get you started.
Okay.
All righty, I'm going to count you down. 3, 2, 1. You get into it. 3, 2, 1, go.
Anyways, I'm Ralph Brown. I hold 4 world records in extreme power boating. Entertainment and media is the 4th largest industry on the planet in terms of profit. The largest audiences on the planet are the Olympics, World Cup soccer, Euro Cup soccer, the America's Cup boat racing. All of them are international sports with country competing against country. And then you have Formula One racing, which too an international sport, racing in 20 different countries. Obviously, the world loves soccer and the world loves racing, especially if it's country competing against country. CupRoyale is exactly that. CupRoyale is a global racing with country competing against country. CupRoyale is the first and only powerboat race all the way around the world. Only 1 team is allowed per country. Each team is a franchise. Each team owner has the right to compete, just like an NFL is owned. CupRoyale is a combination of Formula One, the America's Cup, and the Tour de France. Like the Tour de France, it has 20 smaller races that make up 1 larger race. It's a giant fuel efficiency competition. Previously, Formula One operated under the Concord Agreement. It was a license to race. Recently, Formula One went to a franchise system. Now the team owns the right to race. The average team valuation jumped from about 400 million to an average of 1.9 billion, according to Forbes. We expect the same for CupRoyale. 20 years ago, you could buy a Major League Soccer team for $5 million. Today, the average value of the team is 678 million, with the top teams valued at 1.15 billion, according to Forbes. We expect the same with CupRoyale. According to Family Office Club, there are 85,000 families with more than 100 million. 30,000 of them hide their wealth, leaving 55,000 high net worth families with more than 100 million worldwide. Many of them would love to own a top tier sports team. They're simply too expensive. NFL teams are now selling for more than $6 billion. Premier League teams have an average of 2.3 billion. Formula One teams are up to an average of 1.9 billion. They can buy a CupRoyale franchise for $6 million. Additional revenue streams would include sponsorship and media rights. Companies pay over $100 million to sponsor an America's Cup team. TV media rights for Formula One are worth about $2 billion a year, and NASCAR just did a $1.1 billion per year agreement. Additional revenue streams would include global consumer data, private memberships and apps, logos, and licensing. We do not expect to sell any franchises until we set a new world record for circumnavigation. We're going to go on a gigantic publicity tour, and it's much easier to sell a team when you're in the front page of the newspaper and social media. However, we're way ahead of schedule. It appears that we have 2 teams already sold or to be sold in the very near future. We have a 68-foot race boat that's half built. Materials were all donated by companies that want their name in the media. 12 million is pledged from Sincel Energy. 2 million is pledged from Patriot Outreach, neither of which have been received yet. We've talked to several investment banking firms. All of them said they wanted to handle a $100 million raise for us. At this time, we plan to use the Del Morgan Group in partnership with Globalist Capital. They've raised $300 billion. However, we must raise small capital first. We have a first-class team, starting with me, and then our chief engineer's got over 40 years experience in the boating industry, and the Del Morgan Group, again, has raised over $300 billion. As funding becomes available, we have agreements with the former vice president of the NBA, the former comptroller of AIG Insurance, the publicist at ABC News said it's the best in the world, top-notch marketing director out of NASCAR, and the organizer of World Cup offshore powerboat racing in St. Petersburg. This is my vision. I don't have time to go through it, other than to tell you that 3 years from funding, we expect a multi-billion-dollar valuation. This round, we're seeking up to $1 million in exchange for 10% of CupRoyale and 10% of our manufacturing company. We're going to hire the Del Morgan Company and Globalist Capital to help us raise a target of $100 million, finish building our race boat, and then set a new world record for the fastest boat to go around the world in the history of the world. Our exit strategy, we're going to skip that screen. Our exit strategy is short-term, targeted 12 months or less, 5x, medium-term, 2 to 3 years public offering, targeting more than 25x, and long-term generational wealth, where CupRoyale becomes a dividend stock. Questions?
Yeah, if you have a question, you can raise your hand or post your question in chat. I had a question. If you go back to the ask slide, Ralph.
Which slide?
The ask, with the $1 million portion. So now, nope, go back one more if you don't mind. So are you raising money? Is there one holding company that owns both of these companies, or is someone investing in 2 separate companies?
It's one company, CupRoyale, but we will be
Okay.
starting our manufacturing to manufacture our own boats. I've built more than 50 boats, sold them to the U.S. Army, the National Park Service, the Federal Fish and Wildlife, NOAA, National Oceanic Atmospheric Administration, and sold them to other countries around the world. My boats have been written up in 78,000 news articles around the world. According to one PR guy, I think the coolest one is I got a 4-page article in China. I've never been to China, but Chinese Yacht Magazine wanted to write a 4-page article on me. And so, anyways, but we're one company, CupRoyale, but we will be starting a manufacturing company. If you own stock in CupRoyale, you're going to get stock in the manufacturing company as well.
Okay. So in this slide too, you said you're going to, obviously your goal is to raise capital to finish this boat and do this race. Is there a revenue benefit from breaking this world record? Is there specifically, running this race and building this,
I can tell you from personal experience, okay, nobody cares about what you're doing, okay, for the most part. But when you have a world record and you show up in a harbor with that world record boat, the news media will fall all over themselves to get in front of you and get them on your news outlet. And so that's our goal, is to generate that publicity around the world. 49% of the media is still the old media. 51% is the new media. The new media is very fractured. The old media is not. Okay, they all watch what each one of them are doing. And if you build the news media and you get into the New York news media, the whole world is going to watch that. So when I arrived in London, Channel 4 News from London came out and did a video on me and did a newscast. They turned around and sold that to NBC. NBC played it on their morning show and MSNBC, and they played it all over the world. And so we got contact from all over the world from our previous world records. Right. And so what we intend to do is to go on a publicity tour, generating publicity. We're going to go up the Mississippi River, all the way up to Chicago, out through the Great Lakes, out through the St. Lawrence Seaway, all the way down the East Coast. Then we go to Europe, and you can be in a different country every day in Europe. And when you're in the front page of the newspaper, it's much, much easier to sell a team than you are otherwise. And so we're going to have our own team of salespeople. Actually, our marketing director coming out of NASCAR won't let me use her name until I have on the payroll. Because
So let me kind of be more specific. So obviously you win this race, you get this PR. Is the goal to use this PR to build the value of the team on a sale, or is it generate revenue through sponsorships and other means?
you're selling teams, okay?
Okay.
20 years ago, you could buy a Major League Soccer team for $5 million.
Okay.
Today, you need 678 million to buy one.
Okay.
Okay. We're
Understood.
selling teams that can race in this race.
Gotcha. Fair enough. Awesome. Well, thanks for that. Well, what we do is I do apologize. We do have one question here. How long will a race boat take to get around the world?
Okay, the current world record for a power boat to go around the world is 61 days. Okay. My calculations, and I want you to look at these world records behind my head before I say this, because you're not going to believe me. But each one of them, I had thousands of people tell me it couldn't be done. My calculations tell me I can do it in 35 days if everything goes perfect. With a slight amount of problems, I can do it in 37. So I'll be blowing the record out of the water. And that's my target, 37 days. And then again, that gives me the credibility to sell the teams for an annual race. Now, we don't race nonstop around the world. We break it into 20 legs, 20 ocean races, and then 20 harbor races. The same boats you just raced on TV, you saw on TV, now you can come to the harbor and watch them race in person.
Gotcha.
Okay? And as we already know, the two biggest things in the world on TV is soccer and racing. So obviously the world loves racing.
Awesome.
Okay.
Awesome. Yeah, I was just going to say, it sounds like the Tour de France. I agree, Brian. Well, thanks for that presentation, Ralph. You got your information on the screen. You're more than welcome to put it in chat also. I do apologize. We did have one other company that I forgot about, and I apologize to John right now. And so, Ralph, if you can unshare your screen, we'll have John from Actualization.ai throw up his slides. John, are you there?
Yes. Can you hear me okay?
Yep. And after John's presentation, stand by. We'll have Flippa Invest do theirs. Let me do this. I will count you down. 3, 2, 1, go.
Okay, thanks, Scott. Hi, everybody. I'm John Licato, founder of Actualization.ai. So a little bit about my background. I'm a professor at the University of South Florida in computer science. My expertise is in artificial intelligence. I'm sure you've heard a lot about that recently. I've been director of an AI research lab for the past 10 years, and my specialty is in NLP. So that's the field that created ChatGPT. So I've had a unique vantage point from which I've been able to see the craziness of the past few years. It's been a fun ride. And one thing we've seen is this, despite all the promise of AI, there's still a lot of cases where if you don't know what you're doing, it can behave badly, right? So just a few examples of this in these images. And unsurprisingly, a lot of organizations face AI anxiety as a result, right? They don't know whether if they create AI agents, and agents, by the way, is another word that you should get used to hearing, because AI agents are poised to take over in the next year or so. But companies, when they produce agents, they don't know whether they're going to follow the rules that you give them. And not only that, but when they do become aware of that, they don't know how to test their AI systems to make sure that those systems are actually going to do what you tell them to do when they're out in production, right? No standardized testing exists. And companies will suffer monetary, reputational damages. That's not going to stop AI adoption. It'll happen anyway. It's still forecasted 83% of companies to use agents in 2025. So what they'll be looking for is a way to have confidence that their AI agents will do what they tell them to. And that's where we come in. Our product's called Tire Kicker, and it allows you to kick the tires of an AI product, right? Specifically an agent. So our product uses some patent pending algorithms that come from my lab's academic research for the past few years. And what it does is it looks at the rules and policies that you want the AI to follow, right? It might be a PDF document, might be a informal description you typed out. And from that, it'll automatically generate useful test scenarios customized to the things that you care about, and then apply them to the AI. So you can see if it breaks or not, if it does what it's supposed to. And our goal is this: if there's a vulnerability in your system, we're going to find it before anybody else does. And that's going to give companies peace of mind, defense against litigation, save on development resources, and so on. Our business model has two main streams of income that we're targeting initially. The first, we just released a prototype API. So imagine this: you have a AI agent, you wrote in Crew AI or something, you want to know if it works, just call our API. 3 lines of code, it'll generate test cases for you. That saves on development time dramatically. In the next year, with the funding that we're looking for, we're going to create a revenue subscription model. Think of antivirus, right? Antivirus does scans on your computer. You don't need to know how viruses work. You don't need to be up to date on the latest in virus theory, right? You just pay them, they update, and they scan your computer, right? We're going to do the same for AI. If a new attack comes out, we're going to scan your AI regularly, let you know about any vulnerabilities, and you can be protected against it. In the long term, we want to provide certifications. Nobody does this currently, right? Healthcare and finance, these industries are going to need ways to certify AI products to test them whether they meet certain standards. Nobody does this, and we're positioning ourselves to be ready to provide that when those standards start coming out. So here are the numbers for the target market. Look, the projections for AI are not slowing down, right? Whether it's going to be called agents or whatever. 83% of enterprise expected to use AI agents in some way in the next 2 years. And every single one of those agents is vulnerable to hallucinations and to doing something that it's not supposed to, especially in regulation-heavy industries. And therefore, we can help. This is our team. My co-founder is actually my former PhD student. He's our lead engineer. We have some early validation. We got 25,000 from our university. We got an SBIR phase 1, 275 that started in September. And we've also been accepted to Embark Collective. All very selective things. So we're proud of that as our start. Here's our ask, 1.5 million. We're projecting 2 million ARR in the next 5 years. And we're using the money to keep up in this arms race, which is something that I'm used to doing through my AI research. Thank you for your time. Very happy to answer questions, and please take down my contact info so we can chat more later.
Great. If you have a question, you can raise your hand or post a question in chat. So I'm going to ask probably an obvious question. How are you going to? You mentioned the arms race. So what is your strategic advantage over these mega massive companies that have all the arms, meaning money? So how are you going to differentiate yourself and find a way forward?
Yeah, that's a good question. Hallucination is always going to exist in probabilistic language models, and I can go into the long description if anyone's interested at some point of why that is. But hallucination is going to exist, and the big organizations like OpenAI, obviously they have a lot of interest in making sure that their models behave appropriately, but there are always going to be weaknesses in the models, and when those models are applied to specific scenarios or specific company needs, right? The use of those in specific cases is going to introduce more vectors for attack, right? More ways that things can go wrong. So there's always going to be ways that things can go wrong, and the big companies can't make it so that their language models and their AI systems follow every rule in every scenario, right? Sometimes it's just about making sure that the rules that you give to the AI is expressed properly, which OpenAI can't do for everybody. So those problems are always going to exist, and yeah, sorry.
So we got a couple questions in chat. The first one is, how is AI governance, compliance, and federal law? How is that going to impact what you're doing? Obviously, Brian referenced AI company getting sued and being liable. How are you going to protect yourself from that?
That's a great question. That's what we're trying to provide the protection for. So nobody knows what the AI regulatory landscape is going to look like over the next few years. I think a lot of people expect that something's going to happen, and even if it doesn't happen on a federal level or so on, maybe healthcare might have their own standards for what is an acceptable minimum standard for a healthcare product that uses AI, for example, right? And at some point, those standards are going to involve minimal testing. They're going to say, if you want to put this out to real people, then it has to pass these certain tests, right? But no, those tests don't currently exist, and that's what we're going to be able to provide. So when these standards do come out, regulations or industry specific, we're going to be able to provide those tests that become part of those standards. And that
Okay, we
will
have another
hopefully
question.
help prevent against litigation. Sorry.
Great, thank you. So, question from Iraq. Yeah, how can this be scaled? What are the use cases, with newer threat situations? How can you scale the business with it?
Yeah, absolutely. So the core technology that generates the test cases is AI based, right? The idea is that anybody can upload their rules, which can be in whatever format they're comfortable with. They don't have to be a programmer to do it. They don't have to be a legal expert, right? If they do have legalistic rules or policy document, they can provide that, and then we can accommodate based on that. If they just want to provide an informal description, then we can generate test cases based on that, right? We want to make it so that anybody at any level who's going to be using an AI agent can use our tool and our technology to generate test cases so they can be more confident that their AI actually works.
Okay, it's probably a similar question. Sam asked what I asked. Sam asked, "What about competing in-house testers, OpenAI, Anthropic, etc.?" Again,
Yeah.
another
So
Rolls Royce question. So
yeah, it's another excellent question. So there's enough for everybody, essentially. There's so many potential problems that the AI can introduce, especially when you're specifically applying it to some industry, that there are a whole bunch of tools that are coming out, and we're positioning ourselves so maybe we could eventually be acquired by one of these big players like OpenAI, right? Because if they say, hey, these guys have this technology that generates the best test cases, that finds vulnerabilities in our LLMs better than anybody else, then they might say, well, we just want you guys to be a part of us, right? So we're trying to position ourselves so that we become the tool that all of these big companies like OpenAI use to demonstrate that their product is sufficiently robust against these sorts of attacks.
fantastic. Thanks for those quick answers, John. John, I know you got your thing there. Okay, awesome. John, why don't you do this? Throw your contact information in the chat too, and then you can unshare your screen. That would be great.
Okay.
Our last presentation, part of my mission at Black Dog is to put entrepreneurs in front of investors, and VC Fast Pitch is one of those tools, but the other is through great strategic partnerships. And earlier this month or late last month, we established a partnership with Flippa. And they have provided a great tool to put you in front of potentially tens of thousands of investors. So with that, I'm going to introduce my friend Laurits at Flippa. Are you there, Laurits?
I'm here, Scott. Thank you for having me.
Awesome. So why don't you do this? If you have some slides, you can throw them up. And I'm sure everyone wants to know how to get in front of tens of thousands of accredited investors. So you got the floor.
Thank you. All right. Hoping everyone is able to see my screen here. Yeah, so Flippa Invest is what I'm here to talk about. But before I do, let me just tell you a little bit about who I am. So I used to be an operator myself. I'm the ex-CEO and co-founder of a company I ran for 3 years before exit. And before then, I was on the other side of the table with BlackRock as an associate. And I've also had a brief stint in venture cap at a company called Rocket Internet, and I have an academic background in economics and information systems. So I'm pretty well versed in this universe, and I'm here to talk about Flippa Invest. So I don't know how many of you know about Flippa, but Flippa has been around for 15 years. Flippa.com helps businesses basically find a buyer for when they're ready to exit. And we specialize in digital businesses, online businesses, SaaS businesses, e-commerce businesses, mobile apps businesses. And really what we're offering now today is a new product called Flippa Invest. And Flippa Invest is really an unparalleled access to growth capital. We are helping founders and entrepreneurs and business owners raise growth capital from our base of buyers. So we have over 70,000 accredited investors on the platform today, out of the hundreds of thousands of business buyers that have registered with Flippa over the last decade. And so we're launching a new product to really open up the floodgates to growth capital from these investors who are also looking to not just buy and operate businesses, but actually passively invest in them. And so with Flippa Invest, we're really trying to build an alternative to the VC rat race, to the bootstrapping forever, and to the debt pathways that exist in the market today. So with that, let me walk you through what we offer. So we offer 70,000+ accredited investors. These are high net worth individuals, family offices, and private equities. So pay mind that there are no VCs on Flippa. It's really a different type of investor, folks that are more interested in like revenue generating, revenue growing, and profitable digital businesses, as opposed to grow or die businesses, which are maybe not for, not everyone in the audience here, but some will perhaps lean more into this category. And that's why we're here to kind of offer you this opportunity. And the budget of these 70,000 accredited investors is something along the line of 70 billion. So it really is one of the biggest networks of accredited investors online today. And who is eligible to raise from these are US registered online businesses with growing revenues, seeking to raise anywhere between 50K and $1 million in funds. And we have a customer testimonial from one of the best operators of content businesses that I know, Michael Fink, who raised $250,000 with us a few years ago. And now we're bringing the platform live officially. This was during a pilot run, and now we're bringing it live to many more businesses that want to raise. And how does it work? Well, you apply to raise. We screen your business, make sure it fits with the criteria of our investor mandate. And then we launch your round after we prepare all the material of your deal room with you. And we market it to the 70K plus accredited investors using an AI algorithm that we have perfected over the 15 years of M&A business and business buyer and business seller matching. And then we allow you to engage with our investors. So they get invited to your deal room. You can do Q&A with them. You can share sensitive information. You can do a live demo, and then you can close investors finally to collect capital. And I will share with you here the fundraising options that we have. We have two options today. You either do a direct raise where you onboard each investor to your cap table yourself, a bit of a self-service model, or you use one of our SPVs, one of our special purpose vehicles. So we call that the group raise, where we manage all the pooling of investors and the administration and filings, etc. And that's why we can kind of offer like one of the fastest, easiest, and cheapest ways of raising and securing funding in the market today, is because we have the network of accredited investors. We have the technology end to end to actually bring that to market, and then we can offer the lowest fees. So the direct raise, the group raise, each come with a launch fee of 3.5K, and then we have a platform fee, which is depending on which type of investor or fundraising method that you choose. Which is, again, you can compare this to AngelList. You'll find that this is cheaper. You can compare it to even crowdfunding platforms, even though we're not a crowdfunding platform like Republic or WeFunder, and this is again cheaper. And I just want to walk you through some of the what you're getting, what you're paying for as a founder if you're raising with us. We use AI to match and solicit your fundraising, your round to all of our investors, and really bring out what the elements are that most speak to the investor. And then we have data integrations, so you can connect and prove, your Stripe revenue, your Google Analytics traffic, etc., QuickBooks, and so on, so that investors get a feel for this is a real business. It's not just a pitch deck, but there's actually traction behind this. And then we have the Dropbox Sign API, so you can literally craft side letters, term sheets, everything on the platform. And then we have actual deal room technology to make it super like 21st century for you to close investors. And then the actual payment infrastructure to collect capital as well. So that's a quick summary of what Flippa Invest is. I wanted to leave a little bit of time at the end in case anyone, including accredited investors on this call, want to ask, as well as any founders who have questions.
Thanks for that. Thanks for that. We actually we do have a set up a partnership, and we're working very closely with Flippa Invest on their U.S. launch. So obviously, you can either reach out to Laurits directly, or you can reach out to me, and I'm happy to walk you through the process. But you mentioned crowdfunding, and so maybe you could share a little more flavor on you versus crowdfunding, and then can startups apply if they're pre-rev? We'll get to that question in a second, but why don't you share a little bit about you versus crowdfunding, and then and then Brian asked about the cost upfront and at the close of the funding.
Sorry. So which question do you want me to start with?
So let's start with you versus crowdfunding.
Yeah. Cool.
And then Brian's
Easy.
question are what are the costs upfront and at the and the close of funding.
Yeah. So we're raising, we're helping founders raise under Reg D 506C and 506B, depending on which method you choose to raise on the platform. And we basically allow that to happen by checking every investor accreditation status. So we work with another partner, one partner for the SPV formation and creation, and another partner to actually check accreditation statuses. So that no one on Flippa Invest is not worth over $1 million in like net worth, or has disposable income below 200 or 300K, depending on if it's joint or single. So our investors are also not just like your neighbor or your mom. They are experienced business operators, business acquirers as well. So we have, as I mentioned, like family offices, private equities, but also high net worths of like both ex-operators and current operators who have run digital businesses, like think SaaS, VMS, e-commerce, digital agencies, etc., and are now offering their capital to invest. So you don't just get capital, you get smart money. So that's really the crucial differentiator between, I think, crowdfunding and accredited investors.
Fantastic.
And then answering the questions about like upfront or at close. So the launch fee that you pay to actually prepare and market your round through our platform is a upfront cost, so the 3.5K. And then when we talk about the actual like percentages, like the platform fee, that is at close. So if you are successful in raising funds, we will collect either 2 or 4%, depending on the like direct raise option or the group raise, i.e. SPV option. And then I see a few other questions. Can startups apply if they're pre-revenue? No, we actually have a requirement, a hard requirement for growing revenue businesses only. And then are you working with Canadian startups? Yes, we are, if that Canadian startup has a US registered entity. So we actually refer a lot of startups to Stripe Atlas. You can set up a Delaware C Corp for $500 and have it maintained annually for $100 through Stripe. So we always advise international founders to just set up a US entity. Like you also benefit from it, not just because of Flippa Invest, but also due to like tax reasons and revenue wise. And just like it's easier to collect capital from US investors if you have a US registered entity.
Yeah, absolutely. From our standpoint, we work with literally thousands of investors, and the vast majority of them are in the US, and a lot of angel groups actually do require a US entity. So and then obviously the fee, let me hit Harak's question. Any hurdle, what's the carry? So you want to, Harak, maybe you can verbally ask that question so we get more clarity.
Yeah, just quickly, I mean, what's the carry? I mean, like, the 2 and 20, right? So 2 is the fee normally and 20 is the carry. So in this case, what is the way you guys operate? And the second one is there any hurdle? Normally, some of the funds have 5% and 10%, depends on whatever their policy is. So is there anything like that here?
We're not a fund. You should think of me as a deal scout representing 73,000 accredited investors. So I am really trying to find the best online businesses to bring in front of our audience of investors. and let them, a bit like Scott Kelly is doing here at VC Fast Pitch, a bit like that. I'm bringing them onto a platform instead, and really allowing them to fundraise and help them fundraise. But the like 220 carry, like so we're not a fund, but we do on the SPV option. If you do the group raise, we do have a 10% carry on the SPVs that we launch on behalf of founders. And then we do take the percentage of capital raised as well. So like in that sense, it starts to look a bit more like a fund. But you also have the direct raise option, which is to onboard investors yourself to your cap table, one line item at a time. And that self-service model, there's no carry at all. No worries.
Thank you. Great. Thanks for that.
And just to answer Brian, I think Brian Bell asked a question here. Is the 2% and 4% a one-time fee or OG shares? What do you mean by OG shares?
Like original shares.
Okay. So
versus diluted versus like a fee at the end.
So it's a one-time fee. So we take 2 to 4. So if you do the direct raise, we take a percentage of basically capital that we collect using our payment rails. So we have like Flippa Pay, it's called. It's like an escrow service we use to collect capital, also on the M&A side. We're using that on Flippa Invest as well to basically fund businesses on the direct raise option, and we take a payment processing or a platform fee to collect that capital. It's a one-time fee at payment. And then the 4% on SPVs is done at the time of like disbursement. So when we actually pay out the money, like when the money is invested, so to speak, from the SPV and into the entity raising the capital, that's when we withhold 4% of capital raised. So it's a one-time. Yeah.
Awesome. Any other final questions? Well, here's the thing. We're actually coming up on a hard stop. We're scheduled for 3 o'clock. It's 2:58. So what I'd like to do is this, I'll be sending out a recording along with all the information on the companies that presented today, the presentation slides, and then obviously we'll share about some of the upcoming events and activities we have. But again, I want to thank our investor panelists, all the attendees, and Flippa for being part of our event today. And with this, I'll thank you for your time. I'd love to reach out to you if you have any questions. Feel free to shoot me an email at scott@blackdogvp, or you can reply to the follow-up email I'll send out later today after the recording comes in. But finally, I'm going to wish you all the very best of luck, and I'm going to wish you a very happy holidays, and we'll see you in January 9th for our next event. You all have a good day. Take care.
Thank you.